Good morning, everyone. Thanks for joining in. And I'm sorry, I was waiting for you on a different platform. I didn't know that you joined in there. I was waiting on my phone on Telegram. All right, now that we're here, let's talk about some few things in the way that I look at the market and what precisely is likely going to be going on. I hope you can see my screen. And Jalil, I believe you have a question as regards your
demo.
Your platform. Yeah, so we look into that one as well. Okay, so I just want to look at the market snapshots and see exactly where I can look for opportunities, talk about a few opportunities that I look at last week, and I played out. Last week, I was looking at the Swiss and part of the Swiss that I was checking out last week. I believe the New Zealand Swiss is part of it. And the reason being is in terms of trend and in terms of opportunity that we may have, if you look at the weekly charts, you can be able to to an extent be able to say to yourself that, okay, probably the market will choose to go particularly in a particular direction in the new week. All right, so when you look at the pound Swiss, I consider the 12 EMA as a trend line rather than a static trend line, but a dynamic trend line that flows with the price. So if the price is away from the 12 EMA, I still consider that the price can come back to the 12 EMA and find some level of rejection over there and then start to either go back down. In a situation whereby the price managed to overflow above the 12 EMA, then I'll be considering a retracement level of 36 EMA. So that's just the main idea of how I want to look into weekly charts to see whether there's an opportunity coming up. All right, so you can see on this pound Swiss, we retrace back to 12 EMA. On the Euro Swiss, we actually retrace back to the 12 EMA, and then now we are going towards the 36 EMA, where we will meet another level of another interesting level, which will be this particular level. All right, over here on the Euro Swiss. So the reason why that level is going to be potentially important is because that is the previous low that we broke all the way down. And now we're going back towards that area. I mean, there's nothing wrong in the price breaking above this previous low and coming to this high, which will give us another ultimate level to potentially say that will be a good area to sell that area. So I've kind of mapped that one out. But what is of interest to me last week is what I wanted to point out today. That last week when I was looking at this New Zealand Swiss, I can see that we have a week. This is last week anyway. So I'm talking about the week before. We have this kind of rejection of the low with this daily candle, and then obviously another daily candle that gives us some kind of balancing. Another weekly candle that gives us some kind of balancing or consolidation. And then after that, we now have a huge move that goes back to the 12 EMA. So this is the kind of move that I was looking for on New Zealand Swiss. So what this is telling me is if I look at the weekly chart, I can then be able to decide whether we will have a full retracement against the trend, depends on where we are, or we will have a continuation. So I was looking at that New Zealand Swiss for a retracement anyway, and that was what happened. Okay, because we've moved far away from 12 EMA. On this one as well, last week did almost the same thing, and then now we'll retrace back to 12 EMA. If we look at the dollar Swiss, we are far away from 12 EMA, but we are at the upper band of 63 EMA. This level of 63 EMA is considered as oversold level. And I think if you can then align your EMAs with other tools, you can, on a higher time frame, you can make an informed decision. All right, so with the New Zealand Swiss, you can see that the RSI is even in oversold region. Okay, the RSI was in an oversold region. There's nothing spectacular about being in an oversold region. We can't see any form of divergence, which is bullish divergence, but for the mere fact that we are oversold, obviously price can then find another reason to move back up. Okay, so 12 EMAs trade below it, now retracing back to 12 EMA. It's just me finding clues as to where market can go over the next few weeks. When you look at here, however, we have this RSI, this high, and then this RSI, this low. So as price is grinding up, because equally you can see that we kind of move up in price. Sorry. Let's use another dollar Swiss. So as price is grinding up, I basically like to use this on higher time frame for me to just have this perspective of, okay, which direction can I be shaping my idea? The price was grinding up, and then the RSI chose to be giving us a bearish divergence. This I, right, is that particular high, and the new high that the price created did not give us a new high on the RSI. So we have some bearish divergence that can lead to huge sell-off. And then also, because we are closer to the 63 EMA, I believe that we are in an oversold region anyway. But those are just trade ideas. Going into the nitty-gritty of other stuff, we open our eyes and closer to what I want us to see at the same time as well. Okay, let's see. Bear with me a second, please. Hello. Okay, so the weekly is giving us those clues. When you look at here now, so if you want to say that what can I possibly trade in this new week, then probably Aussie Swiss might be a key one to look for a retracement opportunity back to 12 EMA. And then obviously the Swiss currency index has reached a huge level of low, and then it's showing us that some kind of strength is coming back into the Swiss. So this is one key thing that I will pay attention to. If the Swiss is going to be strong, that means other pair against the Swiss might start to fall based on this kind of formation. So it's just a roundup idea. And then the one key thing is the Swiss yen. Is the Swiss yen likely going to fall? The way that I will look at it is when the price is moving, it's moving from an auction, from different sales events each and every day. So if I look at the way the auction rotates in the previous weeks on the chart, I can tell one or two stories of what is going on. All right. So on this particular week, obviously we saw a huge buying auction, and then we saw this rejection on this particular week. This other week, it's another buying auction, but then followed by a sell-off. So this is a week of anomaly where we cannot we do not have a one directional trade. So this week, the highs and lows of this week will give us a clue. If the price breaks down below the low, then we might continue to be going down. If the price tends to start to break the highs and start to go above the high, we can look for a break and retest opportunity for price to be going back up. All right. So, but the following week gives us a week whereby price slows down. And when price is slowing, it's a sign of a change, whether things want to change from the previous direction to the downside, or price is slowing, waiting for new information to let price to be going up. The other week that follows it, and how do you know that price is slowing? You will be able to understand price slowing when we do not break a new high or break a new low. So we do not break a new high or break a new low on this one. On this particular one as well, price lows at the same time as well. And then new information comes in after, and then we tend to trade above the previous high. So we go back into the one time frame buying, which is in the direction of the trend. And then the concepts comes from this kind of movement. So you either can have a one time frame buying, which means price is just going up in one particular direction, a one time frame selling, which means each and every new candle is making a new high. Making a new low. For one time frame buying, the following candles will be making a new high. For one time frame selling, the following candles will be making a new low. So that's one time frame selling. And then you can have a price low where we don't make a new high nor make a new low, but we are slowing, waiting for new information. And then we can have auction tests to test the strength of either the buyer or the sellers in the market. And then we can have transition confirmation. So each and every day auction follow the same kind of process, or each and every week auction follow the same kind of process. And I'll be delving into this process as we get along to understand the market participant intentions. So we have a one time frame buying because we make a new high above this one, and then you can see that we make another new high above this in a one time frame buying at the same time as well. So for things to actually start turning around, we cannot just say because we have a doji price is going to turn around, although we've seen that the Swiss is likely going to have strength, right? The daily chart may give us a clue as to whether things are significantly changing. So if we look at the daily move at the back of this retracement, one time frame buying, then we have auction test that goes back to our 36 EMA, and then that auction test shows us that we actually test the strength of the buyers in this market, right? And then testing the strength of the buyers in this market to see if they are still interested in buying, we found the buyers at the 36 EMA, and they pushed the price up into another one time frame buying, and then another one time frame buying, and then another one time frame buying. All right. So I haven't seen continuous one time frame buying on this particular day as well. You can see that the price actually edged above this interesting high. So this is a one time frame buying. All right. And then from this one time frame buying, we met rejection at the high. that gives us a red day, and then obviously that leads to a one time frame selling day, which because we did not actually take out the high, but we take out the low. So as much as this looks green, we put more pressure towards the low than the buying that we see. So this particular day, we switch from a one time frame buying day in one single day into one time frame selling, right? So that is telling us that things are likely changing. And then the day that followed after, we had a day whereby we actually go up significantly into a one time frame buying, and on that same day we turn our one time frame buying into one time frame selling by trading below this low, right? So you need to have some references in the on the charts to let you know when things are changing. When you know when things are changing, then you can act according to that change. So we then flow continuously down in a one time frame selling. So this is an anomaly candle in a way because we trade above the eye. This is a day whereby people can lose a lot of money because a trader that is already having it in his mind that price is going up and then price goes up and it stays in that buy, right, without looking to the left, can find himself in a lot of challenges, not knowing that in this left zone, there's a lot of huge supply that's over there. And then we have the significant sell-off, and this is an anomaly candle for a decision to be made now to actually buy. If you're not buying the 36 EMA, because it's a retracement level, then you're gonna wait for price to actually break this high and retest it and fail that retest to continue up. So just some idea at the back of the price. So we can really say that the price is going down until we start to break some key significant lows. Days like this do exist in the market, and that's what happened because we have the intervention from the Bank of Japan. They are trying to rescue their currency, and there's no way they can rescue that currency that much because the interest rate on the Japanese yen is significantly low. So every strong currency is taking advantage of that. And you can see for a very long time that the Swiss has just been in an uptrend, right? And just like what I was saying, if you move away from the 12 the data we trace away from it on this account, we trace away to create another buying this up. And this now is a difference. So we have to focus on the so this might not be much some of the things happen or is it the right set of consideration. So what is supposed to me? The Aussie Swiss interests me because as it move a bit the Aussie is getting stronger and of a move was the 12 EMA, which is about 91 pips. What else could of interest to me? This was of interest to me last week, and we've done that move. The pound Swiss is not of interest to me. I would say the Euro Swiss can be of interest to me because we've cleared the trend line and then we are moving towards the 36 EMA. So I know that we have a bit of a gap to go up. Using the weekly chart, we can see about 170. I just want to have an overview of idea of what to trade and where we can see the move. So the Euro Swiss has cleared the 12 EMA, and if it's going to go to 36 EMA, we have 171 pips, okay? And the Aussie dollar is giving us, okay, so let's do this way. I think I need this too. So I'm looking at here and I say, okay, because I have so many analysis. So we have about 133 pips. This one from here to here, potentially we have about 83 pips. Those are the two currencies that are of interest to me in the Swiss. So if I go to, so the Euro Swiss and the Euro Swiss and the Aussie Swiss, we might be looking at them for a for a move to the upside without much of resistance or challenges. So if I go to the yen pairs, in the yen pairs, then I will then look at what weekly strategy can I, and why do we check the weekly? Why is the weekly important? I think that's a question that we might be looking at. If you want to hold a position for a couple of days, the weekly levels becomes important. So the reason why I'm doing this is, okay, if I want to swing some position in the next few weeks, then the weekly, where the chart is as regards to the weekly, becomes important. So if I look at the 36C, I'm sorry, if I look at the pound yen, there's nothing on weekly. If I look at the euro yen, I can see we've moved away from weekly, and then there is potential possibility that we will retest this weekly area, especially if this candle is giving us a unique doji like that. So the retracement trade definitely is a trade against the trend, okay? In some charts, you don't want to look at the retracement trade at all, because if the trend is on the, it's better you keep your trade in line with the trend rather than looking for a retracement trade, because a retracement trade is a hard job or a hard not to crack. So that's talking about retracement trade. When you start to check all the peers, the reason why I chose the Swiss is because some of them offer us a genuine retracement opportunity. So this is another pair entirely. These are all the yen pairs, all right? The pound yen, the trend is on the upside, and things are going up. So I think we cannot decide any retracement trade immediately on the pound yen, except for some of the things that has happened. We have this weekly rejection on the pound yen, all right? So, and when you have a weekly rejection, it's signaling a potential possibility for price to reverse, depends on which area that weekly rejection occurs. So the pound yen is a chart that I look into for next week opportunity, and then we will look a little bit detail into it to see what we can find. So I'll talk more on the pound yen. The euro yen is doing the same thing. We have rejection at the high, but the rejection that we see on the euro yen compared to the rejection that we see on the pound yen is totally different. The pound was properly beaten down, you know. So this rejection might give us a continuation. Meanwhile, this rejection might give us a continuation of a sell-off, excuse me, to certain level. Meanwhile, this rejection can just be the same kind of rejection that we see on the New Zealand Swiss. When you look at this, we saw this rejection and then we continue to go to the upside on New Zealand Swiss. So if we look at the euro yen, we saw rejection and there's a possibility for us to continue. It's not as deep as the rejection we saw in the pound yen. Now we discuss more about that. The one that I'm looking at for a best opportunity is this Aussie yen. We retrace back to 36 EMA and then we bounce off it, and weekly has shown us a bit of strength. And then in line with the trend, you know, this will be the best opportunity to take for a buy ride, because we've done that retracement, a much more deeper retracement. You see that we trade above the 12 EMA on this candle. We met a rejection. It's more or less like the same rejection that all this one are meeting over here. We met that rejection, we sell off back to 36 EMA, we find rejection as well. So how did this one occur? When you look at the weekly, you can see that this side we found a rejection, then we find one time frame selling follow up, another one time frame selling follow up, right? And then obviously we have this particular week that looks like we are going to buy to retrace every single thing, but you see well pressure down. But this is a one time frame buying, and then that one time frame buying switch back to one time frame selling, and then but because you can say in this region where we have the one time frame selling, there are a couple of things that can reverse price back up, which is there's a support level over here, there's 36 EMA level over there. So those are two confluences, and then the price lifts up, and then we start to see buying scenario again. Okay, so as price is going to the upside now, I haven't tested 36 EMA. I generally believe that it's a good opportunity to buy. The only challenge that I'm envisaging is we have so many rejection level which are on the weekly in this area, you know, and we need to actually clear all those rejection level for us to find that full strength of buying. Okay, so let's look at an example. When we retrace back to 36 EMA, right, we have rejection level just like the same one on the upside. You can see various rejection level to the left. So we retrace back to 36 EMA, we have all this rejection level to there, to there. So as price is trying to go up, it struggles a bit in that area, right? It takes it about 2 weeks for it to get convinced to then continue to give us bullish weekly one time frame buying, continuous one time frame buying, another one time frame buying. Then we had an option test just because there's 200 EMA, and continuous weekly move to the upside. So 36 EMA rejection gives us a powerful move to the upside. That is one scenario. We can look at multiple scenarios as well. On the downside, we retrace back to 36 EMA, and then we had a good selling off. You know, it works both ways. We trace back to 36 EMA, anticipate a sell-off. Let's look at another buying opportunity. So this is just us testing the 36 EMA strategy. I mean, this is very fast, but there are other things that you may have to consider at the same time as well. But in that region, if you see a possible retracement to 36 EMA, you can get a good lift up in price. If you find a rejection, I can do a good lift off in price to the upside. So based on the price behavior, and we have similar thing over here, so it is just equally sensible to be looking for buy opportunity in Aussie yen. So Aussie yen is one of my key one that I'll be looking at. CAD yen has retraced back to 12 EMA and is pushing back up. So this is good for a buy as well, in line with the trend. New Zealand yen comes to 36 EMA, and then it's retracing back up to areas where there's a lot of congestion back as well. It's not going to be one of my favorite because there's so many weekly rejection over. So the dollar yen is encountering a rejection, and this rejection can then give us a clue to look at the dollar yen in a way whereby we can say that the dollar yen is giving us an opportunity for a retracement back to 12 EMA again, based on this rejection. So straightforward, you can use some of these analytics to decide that, okay, this is the potential possible outlook that I'll be looking at on this currency. So this one, I'll just put it for a red, possible retracement. So now if you tend to think of it, I found a couple of pairs. Let's say one of the pairs that I'm thinking of looking at for much more detailed analysis is Aussie Swiss. And then we talked about another pair on the Swiss level as well. I don't know if anybody can remember the other pair that we talked about on the Swiss level that we might be seeing a much decent opportunity. Dollar Swiss, before I go back to that chart, does anybody remember any other pair that we look at in the Swiss at all? It's good for the class to be interactive, not just that I'm just chatting. So Aussie Swiss, the reason why we look at Aussie Swiss is because it's far away from the 12 EMA and price might retrace back to it. The reason why we talked about dollar Swiss is because it's at 633 EMA, it's an oversold region, and then obviously the price can retrace back to it. Then we talked about another one that has actually moved above the 12 EMA, and that is Euro Swiss. And this is with me now looking back at the charts. I can say equally, if I want to look at Swiss pair, I'm looking at Aussie Swiss for continuing retracement by opportunity. Just to recap, retracement by opportunity in the new week. I'm looking at dollar Swiss for retracement sell opportunity. And then I'm looking for Euro Swiss as retracement by opportunity. All right. So retracement by opportunity, it's against the trend. All right. So it's like I should have it at the back of my mind that this trade I'm picking is against this trend. Any level that it can get to whereby it gives me profit, I should take my profit as quick as possible. This is not a trade whereby I want to say to myself that I want to sit down with because it's in line with the trend. Okay, so these are the ways to shape your mental thought process along with the direction of the market. We talked about this one that is likely going to give us about 88 pips. And we didn't talk about the number of pips we can get on this one. And we said this one is likely going to give us about 171 pips to the 36 EMA, okay? You have to flow with the market and understand the reason why you are doing certain things. The only reason why we are looking at this is what can we gain in terms of reward on this. Okay, so if we look at the Aussie yen and we say that what can we gain in terms of reward on this, it will be a trade back to this level, which is 432 pips. Okay, so I'm going to choose another Aussie yen, which I haven't done so much jargons on. Okay, so if I look at the potential for this trade, it's going to be here, let's say to this high on the maximum to start with. So the potential for the Aussie Swiss in the new week is about 473 pips. So Aussie yen. Are you following me at all, guys, if you are in the room?
Yeah.
All right. So if you are following me, so what we are doing is we're doing some selection process, Aussie yen. And then we are saying Aussie yen can give about 473 pips, just back to the high, in line with the trend, in line with the trend. So why am I doing this? Giving you a bit of strength to say that, okay, if I'm going to hold on to this trade, how far can I hold on to it for in a way? All right, so that is on the highest level, but we talked about this as well. We talked about the fact that if I'm going to be buying Aussie yen, I have to be careful because of some of the things that has happened, which are previous area of high. So we have about 182 pips might be the first target where price might sell off in this area of previous weekly high, 182 pips. And then there's another previous weekly high, 274 pips before the major target of 473. 473. So 182 pip. Let's say 140 pips to this previous high area that we've seen. Let's say 150 pips and then 260 pips. All right, so TP1 at, let's say 150 pips. That's target profit 1. Target profit 2 at 270 pips before the ultimate target profit of 473 pips. All right, so now what we are doing is we are looking at different pair and we are saying to ourselves, if I can make 473 pips on the max or even 150 pips on the max in line with the trend, right? In line with the trend. And then the ones that are not in line with the trend, I can make 171 pips against the trend. Dollar Swiss, we then get to measure that one, and 88 pips against the trend on this one. So you are, what we are equally doing is we are looking at which pair can offer us the best setup, the best opportunity. For now, we are saying the Aussie yen in line with the trend. So just putting some perspective into our analysis and seeing how best we can navigate this market going forward. So we talked about dollar Swiss. The dollar Swiss is the one that encounter rejection, and this particular trade on the dollar Swiss, if we have this rejection and it's going to go back to 12 EMA whatsoever, delete that on, how far can we go from where we are currently? So we can go about 511 pips, you know, even if price decide to jump up forward a little bit to the upside. So the dollars is giving us 500, let's say about 500 pips. So what I like to normally do is I like to have like a spreadsheet so that I can keep my my, what's it called, intact. So if I say new window and then I say sheets, just use Google Sheets, I can decide to have a new spreadsheet. And in my new spreadsheet, what I want to do is a no currency pair. I want to copy what I've said in there into that. I will rearrange that later on. Okay, so I just know that we have this spreadsheet here for now. In case the system turn off, I know this will be saved. So now, in this spreadsheet, we want to pick things like we want to have something like in line with the trend. Okay, and then we want to have something like against the trend. Okay, and at the same time, this one that goes against the trend, we want to have we want to move it to this level. We want to say currency is and potential pips. And the same thing occurs to this one as well. So this is you managing your trade idea, potential pips, so that at least you can keep this idea with you. And this potential pips will move down a little bit, and then currency pair. Potential pips. Okay, so in line with the trend, we have Aussie JPY, and then you are looking at potential pips of 150 TP1 to 70 TP2, and then ultimate 470.
All these are preparation.
Yeah, this is you just preparing. After you prepare, you will then compare. You will now sit down again and compare that, okay, based on what I pick, which charts will offer me much opportunity. And then you will now do a little bit of a deeper analysis on
sorry,
that.
I want to ask one question.
Yeah, go on.
Concerning this, so all this preparation has to be done before, as in maybe the weekend or Friday before the new week.
Exactly. So that while things are changing, or if things are going to change, all you have to do is look at your preparation sheets and say to yourself that, okay, the trade I'm taking is against the trend, and things have started to move back in line with the trend. So obviously I'm better off going in line with the trend. Or if I take this trade and it's moved in my direction against the trend, and I've reached my 88 pips target in case of Aussie Swiss, I think I should just ease off a little bit, take majority of my profit out in a way. And then obviously, if it continues to go fine, although I've made my the profit that I need to make, you should be getting your profit out of the market in a way. All right, when we look at this chart now, and we need to look at this one seriously. If you have done a bit about trading, and we have this particular eye here, and we have this particular lower eye here, and then more lower eye there, right? What this is telling us is this is a bearish divergence, as indicator is moving lower, right? We then have friggin' price moving higher. So the indicator is showing us a tiredness coming into the dollar yen, and this is the one that's offering us much peep. Anyway, if we go back to our sheets, you can see that the dollar yen offer us about 515 pips. So if I want to do further detailed analysis, I'll be considering dollar yen, although it's against the trend, and I'll be considering Aussie yen in line with the trend, so just a little bit of analytical preparation to guide you into how the market will behave in the new week. All right, so if we go forward, let's look for more potential opportunities or potential pair. All right, what can we see again? So we've picked the Aussie yen we've picked the Aussie yen for potential buy, the dollar yen for potential sell. We are looking at pound yen, and this pound yen at the same time as well. I'm thinking if this weekly is going to continue the sell-off, we can have a good sell-off because of that rejection to this area, about another 527 pips on the pound yen. Sorry about the mess. Although it's against the trend, what else is in line with the trend? This is in line with the trend, but it's got so many rejection coming up. So we need to be balancing. Let's say, for example, when you look at our charts, we've got in line with the trend, just one trade is in line with the trend. Against the trend is so many trade, okay? So if these are against the trend, you will want to put a much more lesser lot size on a trade that's against the trend, while you want to put a much more higher lot size on a trade that is in line with the trend. So you are just basing your trade pick on the right way to actually look at the market. So I'll be considering pound yen because of this rejection, a good rejection. The Swiss yen, there's a weekly rejection as well, or weekly doji. Those are huge signs at the same time as well. And then we've seen that in the Japanese, the main basket of the Japanese currency, we have this deep weekly rejection, which can give the Japanese currency basket a lift of price going all the way back up to the 12 EMA as well, and that is key in this scenario. If the whole basket of Japanese yen index is showing us an early rejection that we've seen on the weekly, the possibility of that rejection being followed through is more likely, despite the fact that, in line with the trend, that is going to be against the trend. Sorry, we can equally see that the trend on there's no doubt. This is no. I want to remove that. Okay, when you look at this, we are trading below 200 EMA. All right, the buyers are actually above the 200 EMA, and then the 200 EMA is the seller's defense line. So imagine if you catch an early trade that choose to go back to 12 EMA, go back to 36 EMA, go back to 200 EMA, which is the last line of defense of the sellers. This will be a potentially immaculate trade that anyone can possibly catch. And it is not a magic. Let's look at something quickly technical to see whether this level where we stop has some very strong implication at the same time as well on the basket of yen currency. So we just want to quickly look at projection, a strong level of projection from the high to the low. Okay, so there in some other method of analyzing the market, which is the geometrical way of analyzing the market, or what we refer to as a measured move of analyzing the market, to believe that the market moves in different waves of fold. All right, when I put my Fibonacci above the eye, okay, and then takes it to this particular low, the Japanese yen currency stops at a key level of 1.212. This is a key Fibonacci level. It was actually heading to 1.272, which is where it cannot obviously stop. But before it gets there, where did we extend to? So from this particular low to this particular high of 61.8, which is around 38.2%. This is the way the swing forms. So we have a swing to this low, we have a retracement of that swing, and then the extension of that swing to 1.272. There's nothing wrong in the swing coming to 1.386, and there's nothing wrong in the swing coming to 1.618, okay? And at the same time, the swing can stop at 1.212 or 1.272. These are just gauges. So now we can see that this swing did not just stop anywhere. It stopped at a key Fibonacci level of 1.212, okay? So what professional traders or mathematical traders will be looking for is if this 1.212 is where we're going to hang, and look at what the price did. Let me move this one a little bit in, and I hope you are following this. So what we've done is we look at historical high, just what we can see on the chart of that, and then historical low of that, and then we plot the Fibonacci from that high to that low, right? We look for the retracement, which we've seen in key 8 levels of resistance, and then that's where price tends to start to fall off in a longer time horizon. And then we fell off to a key level of 1.212, which is another key Fibonacci level. So what will become important for traders over the new week is watching the yen closely and see if we can actually come and trade back above 1.212. Okay, so the moment we start to see that we are trading back above 1.212, the traders will become much confident in saying they want to hold on to their position and be looking for 12 EMA, potentially looking for this other low and potentially looking for this high. These are key levels that the price will be targeting if we are able to trade back above 1.212. And this will be the guidelines for us in the yen trades, because if the yen continue to push up for whatever reason that I continue to do that push up, then obviously the other yen pair will be suffering, they will be selling off. If the yen fails to, or else if there's any other currency that is more stronger than the yen, and when you look at how we closed last week, the yen over here, I don't know if you can see it, we close with the yen at 1.68. Okay, so the other pair that is stronger is Aussie. All right, so Aussie can be the one that will be fighting the yen significantly in terms of strength as we are heading on, and then the New Zealand. All right, so you can see that the yen, it's a safe haven currency, and we have all the commodity currencies, Aussie, New Zealand, and Canadian following it. Okay, so in this kind of a scenario, as much as we could have called it a risk aversion because of the yen, the dollar, which is the greenback, that when people are running away from risk, well, which is averting risk, they will be flying into the dollar remain completely dead. Okay, so we are back all in a risk on environment. Okay, we are back on in a risk on environment because all the commodity pairs are becoming more stronger than even the greenback. I mean, yen is a safe haven as well in a way, but for this particular reason, there's a divergence. Yen should have been towards it, but the Central Bank of Japan is doing their intervention, and we are looking at the charts continuously, and we are seeing some key clues that if this chart continues to be giving us some bullish divergence like that, the price is coming down, and then the indicators is going up, we might find ourselves in a big hot soup, you know, like literally we might find ourselves in a position whereby the yen is matured enough to reverse. There's a key Fibonacci level over there. So we are just tying the events that we're seeing on price with what we know technically, you know, and if you start to buy your yen from this level on any pair that is weaker than yen, then obviously you can have a key development in price explosion. And that's why we are looking at things like dollar yen, because dollar is remaining weak. Okay, so we've picked a couple pairs in terms of the yen as well, and we've analyzed the yen and we see which direction the yen is kind of going. If the yen continues to be strong, some currency pair will suffer. And I think one of the ones that will suffer the most might be the dollar yen. And the other one that will suffer the most might be if we look at this as how we close, might be the Swiss yen, the pound yen may suffer at the same time as well, and euro yen may suffer significantly. So I will want to look at other analysis of the pound yen at the same time as well going forward. And we talked about the Swiss might suffer at the same time as well. And if all these peers are suffering, they can give us a significant amount of pips going forward. The Swiss is especially risky at the same time as well. Why is he in a risky position? You can see a potential possibility for something like this happening after this swing from this particular low, okay, to this particular high. We have this higher low to this particular high, okay, and then we have this potential higher low to this particular high, which we have on trade above. If this is a lower high and then price want to sell off, we can equally see that there's a risk of price declining against price going up and breaking this low. And if we break this low, then we've accomplished a major move on the Swiss yen. And obviously that can, if we break this low, that can start to change our perspective in the next coming week as to which direction things want to go. So the key thing again is, do we have divergence? Yeah, we can see that there is a lot of bearish divergence. The price is going up. The indicators is kind of slowing down in its ascent. So that's key as well. Let's see whether we have that same divergence on monthly. Okay, the monthly is just powering up very strong significantly anyway, but weekly has been showing us bearish divergence in a way. And then if you look at it as well, if I hide my RSI and then you look at here, when we peak over here, yeah, and then when we peak over here at the same time as well, we peak on the MACD. And then when we peak over here in price, the MACD2 did not peak, right? So which means we are seeing divergence not just in the RSI, we are seeing divergence in the MACD as well, as the momentum is not strong anymore. Okay, the momentum is declining. Okay, over here when we peak and then we sell off, and then the momentum peak back above the previous MACD. All right, over here, and then what are those levels? Let's look at it like this. So we are talking about levels like this and levels like this in. And then we are talking about this high, and then of course that particular level. All right. So yeah, and then when you look at it and we come down over here, we do not make a significant move higher above the previous high on this particular one, you know, although price make a new high. So we are seeing clear divergences coming in the price, and then these are high time frame divergence. If things are going to sell off, it can take a drastic sell off. So apart from everything that might be occurring in the news, the good thing about a trader is you don't base your judgment based on news. You just base it based on the price data. And if the price data is telling us that, we need to pay attention to it. And these are trades that can change your life if you manage to catch it. All right, so those are the interesting developments coming forward. All right, let's look at another pair. If we look at, some other pairs. If we look at some other pairs, I'll now choose one based on what we look at. All right, so before we do that, let's look at against the trend, the kind of opportunity that, so that we build up our list, then to choose which one to analyze. Okay, so what I want to do is I want to delete. So if this one comes all the way down to here, at least we can have 280 pips against the trend on dollar Swiss, sorry, on Swiss yen. So the other one is Swiss yen. And then against the trend, it's about 270 pips. Okay. What else can we see? We are looking at, you've seen Swiss yen, we've done the dollar yen. This one, we are looking at so many congestion, so we are trying to avoid it. So this one, pound yen, is going to be against the trend. If we are taking a trade against the trend, I think it's about 500 pips that we saw over there as well. From here to 36 CME will give us 558 pips. So 558 pips. Or it might be less than that if I actually send it there, because I send it to 36 EMA. If I send it to 12 EMA, let's say for example, about 360 pips. Okay, so 360 pips first, 360 pips. Okay, so moving forward, Euro yen, if this is going to sell off for whatever reason, so if this is going to sell off, which it might sell off because of, I'm back to 12 EMA, we can have 420, back to 36 EMA, we can have 831. Okay, so for Euro yen, you can have 430 and I think 831. I will double check that one in a minute. 1 second. So let's choose another Euro yen chart that is not that messy. So from where we are currently, if we're gonna start to encounter a sell-off, and we're gonna go to 12 EMA 390, and then if price is gonna come to let's say about 750, 390 and 750. So we are just 390 and 750 potential. Okay, I'm not saying that we drop in one go, you know, but just to have a perspective. All right, so leaving that and moving to pound, and we are looking at a weekly chart of pound. Let's see whether there's an interesting development. So the first one, which is pound dollar, as 812 EMA, I'm not of any, I don't have no interest in that more than so. The second one, which is euro pound, has gone to the level where 200 EMA, the sellers are coming back in to defend. Well, there are a couple of things that one can look into on that one. The third one, which is British New Zealand. And it's quite interesting what is going on in this one as well. We trade above the 200 EMA. We are actually approaching 63 EMA, and then we start to see this sell-off. The one that might be of interest is Euro Pound, retrace back to 36 EMA, and in line with the trend, can potentially continue to the upside. And why is this important? Because when you look at the trend, we have this low, we have this high, we have this lower, higher low, we have this higher high, another higher low, and potential higher high. If this is a higher low, right, and we've had a weekly rejection, so we have a good potential possibility for price to move up, hypothetically, okay? So in line with the trend, euro yen, in line with the trend, euro pound can give us a potential price movement back up in line with the trend of about 580 pips. So we say in line with the trend. EURGBP, excuse me, I'm gonna get my door here, 1 second. Yeah. Since delivery. Okay, so we found something in line with the trend, which is euro pound, and we find it to be giving about 560 pips potentially. Of interest in that because it's in line with the trend. And against the trend, pound Swiss, it can equally move to 36 EMA against the trend, but we have so many things against the trend anyway that we can equally look into. So British guard, please let me get it down 1 second. Hey, sorry about that. What we can see again is delete, delete. Okay. The British pound, in line with the trend, is for price to continue to move up. We only have a caution of this weekly doji coming up, right? And the main British currency index is pushing higher, is closer to here. So we don't really have much of anything to look at on there on British pound more than so. As we continue to go based on last week price action. All right, so if I look at New Zealand pairs, which are Kiwi pairs, and we switch to weekly quickly because time is literally going, and then I'll do one massive what's it called, analysis on one, and I'll be able to pick some entries that I will be looking to get involved in going into new week. All right, so the first one, British New Zealand, we've seen that one before. The Euro New Zealand is coming up with an, so in this as well, we'll be looking at some candlestick signals. If we see anything that is like a candlestick signal, like when you look at this, we have some candlestick signals like a pattern, like evening star, where you will have one strong candle and a smaller one, and then the sell-off. So this is an evening star pattern. It might be something that I may want to consider, but obviously with the idea of our 12 EMA that we are talking about, a trade against the trend will be this sell-off that we are seeing, but because we're sitting on 633 EMA, it's a huge level at the same time as well. So I'm not going to really be doing much with this one for now. This guy, let me put on the strategy on it. The 12 EMA as a trend line. So this one has touched the 12 EMA, so I'm not interested in it against the trend, but we can hit the 12 EMA. If we find rejection near here now, then I'll be thinking of selling off. So this one is not ripe enough. We haven't seen any rejection candle. This one is not ripe enough at the same time as well. So the other one that can move a lot more higher is New Zealand dollar, you know. It's moving away from 12 EMA, and then we can equally move against the trend on New Zealand dollar to 12 EMA and have about, it's about 120 something pip, 120 pips on the minimum. So against the trend, New Zealand USD, about 120 pips. So with what we are seeing, you will know that going into next week, you don't want to be risking a huge loss, because majority of the things are moving against the trend. Because if trend is going to turn very quick and you have a huge size on the market, then it can become very, very challenging. Okay. And in line with the trend, Aussie New Zealand, this is the one that I'm thinking of as well. So Aussie New Zealand, we have literally done a situation whereby we continue to move up, we break multiple structure on the high side. Let's look at this last level, which obviously we break that one as well. Let me just hide things. And then we are moving back to an area of multiple congestion and 63 EME, 36 EME. This might turn around in line with the trend and start to go back up. Or if this sell-off is strong, we can then break all this level whatsoever. But obviously we've turned bullish in a way, and then we can continue to see a move back up. So I will, no problems. It's recorded anyway. So only if you can put it on the charger, it will be good. So Aussie New Zealand is something that I'm looking for a retracement back up in line with the trend. Sorry, Aussie New Zealand, yeah. But I have to see that rejection on weekly first of all, which I haven't seen. This New Zealand yen. So New Zealand dollar and Aussie New Zealand are the pair that Aussie New Zealand is in line with the trend, still waiting for it to be mature. Aussie New Zealand is in line with the trend, waiting for it to mature. If we find rejection, and that rejection will then possibly give us a trade that will be able to move how many pip. So we are giving ourselves an idea of what we can see in the marketplace. So we can see about 420 and then 517 to this high, 420 and 517. So the main sense of this exercise is for us to be able to visualize what are the possible potential ahead of the market. So we are kind of prepared in a way. So we've looked at that, and Aussie New Zealand is the key in the, and what else did I see again? A New Zealand dollar. All right. So I'm not going to go into most of the pairs anymore. I'm now going to populate my spreadsheet and quickly look at, okay, which one of them is actually offering one of the best opportunities. So in terms of in line with the trend, we see
Hello.
that, yeah, go on.
I want to ask one question. So
Sorry?
what's the difference between these metaphor currency meters and these forex factory data stuff? Because I observe there is difference between the two, as
What's the
maybe that,
difference between the what?
as in I observe that there is difference in their currency pair in their meter stuff. You know, when you check the currency meter of metaphor, which is on my demo, which I used to do, and also when I check on this forex package, the one that you indicated on your system today. I don't
The
know whether,
trading view. You're
yes.
talking about what's the difference between this
I always observe, so you understand.
and then you're talking about the difference between this chart and this chart. All
No,
right.
you come to that meta, this and the trade view that you are talking about now. This currency meter,
The currency
talking about,
meter on the MetaTrader 4.
yes, and that trade view also. I observe that it is always different. When maybe Aussie dollar is higher or New Zealand, that one maybe that one maybe is Japanese. This is always higher on their this thing. So.
All right. So to put that simply, the currency, probably you're talking about, 1 second. Okay. So you're talking about the currency strength meter on this one, which is this one.
It's not this one.
Which one are you talking about?
This you show this thing to today now. No, this one is right, but the one that you are talking about, my battery is.
Okay, I'm not sure. I think we've lost Jalil. Okay, because he was saying to me that his battery is gonna be low anyway. Apologies for that. My friend is in Africa, and sometimes electricity can be a challenge. All right, so but this session is recorded anyway, so I didn't quite get his question before it departed. The last bit that I wanted to do is I want to look at what is going to be most attractive for me to trade going forward in the new week. So the pairs that I've chosen that is in line with the trend: Aussie yen, Euro pound, Aussie New Zealand, right? And so if I want to take anything in line with the trend, I'll be considering this pair. And I can see that in both Aussie yen and Aussie New Zealand, there is Aussie present in both. In this one, we have Euro pound, okay? Which means it is just separated from the three. And then over here, I have Aussie, Swiss, dollar, Swiss, Euro, Swiss. I can see that we have a common Swiss issue over here. Then we have dollar yen, other Swiss yen, other pound yen, and Euro yen and New Zealand yen. So I can see that we have yen and Swiss combination of denominators. So what is key for me is which one is doing the highest PIP. So Euro yen without any bias gives me about 750, and then dollar yen gives me 515. So I would like to analyze the Euro yen and dollar yen. And obviously in this one, Aussie yen no, European and Aussie New Zealand can possibly give me a better reward. So if I start with the ones that are in line with the trend, which is European, and then probably we can look at another one and call it a day. So the first thing that I would like to do is I will go to my European on my MetaTrader 4. I just want to see some levels in terms of my market profile and based that on what I'm thinking. The one key levels that's important to me is what is the current monthly point of control, which is this particular level 0.8 on 0.8600. What this does for me is if price is above the monthly point of control, I expect that what the traders who are in that auction is doing at that particular point in time is initiative, which means they are happy with what they're doing. Their strength is okay for them. They are initiative buyers, which means they are more than happy to be trading in line with the trend. All right. If price comes back to it as well for whatever reason, and then they start to buy back 8600, which we've seen over here, price comes back to 8600, and then we push things back up, then it still shows that they are strong, despite the fact that they have responsive selling from the high. They are still defending this 8600. Okay, so if I go to weekly, so, sorry, I will be noting my 8600. If I get a trade back at 8600, it would have been a good opportunity for me. That is my key level. That is one level that I know that the buyers are coming back over and over to defend. You know, that is the best level to look for trade. But if I'm not going to get that level, I have to look at what is going on again. And the next thing is this 830. So I can see that the price is flowing between this 5-year point of control and the last 10-year point of control, which is 830 over there. It's 830, right? So any trade, even if price rises back to 8830, I might want to consider a sell off back to if price gets to 8600, 233 pips. Okay, so those are the boundaries. The other boundaries that we have is this particular boundary. So step by step, the price move away from one particular level, then it should go to another particular level, type of a thing, step by step. So I just want to note where my higher time frame levels are that price can get to, and then reverse in a way. So I've got 1, 2, 3 levels on monthly. That is okay. Price is not just gonna go against those levels very easily like that. Then on weekly now, I can see that if price comes down to this value area I, this is a little bit advanced, but if you don't listen to it, you won't understand. So the value area I is more or less like an area of resistance. If we break above and then we retest it and we are staying above that resistance, it's showing me that there's strength in the currency. So the weekly is what brings the strength that we are looking for. But what kind of strength are we actually seeing? After this key rejection, then we have a one time frame selling. Okay, we have another one time frame selling down and one time frame buying up, although it's anomaly. And then obviously we have further one time frame selling in this week before we meet the rejection on 36 EMA. We trade back above monthly point of control, we trade back above weekly value area I. We are standing strong, very strong above all areas of rejection. So I'm then anticipating a potential possibility for going up higher. So I'll move quickly into daily to see whether my buyers remain strong at the same time as well by observing what happened on the daily. So you have to go through all the time frame for you to find something that you may not necessarily see. If you don't take that due diligence of going through all the time frame and understanding what is happening, then it can be very challenging. Okay, so what I'm seeing on this daily chart is we have a daily point of control over here, and that has literally limit my risk. It's 733. So 8733 is the key number that I need to see us trading above strongly for me to know that we will be continuing, which is the daily point of control. And we have another daily area where we can quickly take a daily profit before things reverse a little bit in this area as well. All right, so what we want to see is as price is saying it's going down, then we come back to this level of 87.3. If we trade above it for whatever reason, I will have a low risk trade. And if price is coming back below 87.33, then I want to change my bias then. But in this case, we are anticipating a potential possibility for continuing to go up higher. So that is just for now, just looking at some possibilities on this euro pound. So as price moves from high to this low, give us a lower high, give us a lower low, another lower high, and then a lower low, and then a potential possibility for a lower high, right? And we can see that the order flow is literally pressing to the downside on this 4-hour chart. And that is one thing that we have to pay attention to, that, okay, if we move from this high to this low, back from this high to this low, back to this high, then to this low, back to this lower high, then to this low, right? Back to this lower high, then to this low. What we have seen is from this low, we trade back above this side, which is good for us in terms of bullish order delivery. The whole exercise hasn't still done so much, but if we now come into the new week and we start to see a bounce back above 87.33, we will believe that the daily traders who have been trading over the last 3 months, this is the price where all of them exchange the most. This is the price where 87.33 is the center, or it's a point of control for every traders that have been buying this currency in the last 3 months. So if they want to stand above 87.3, then the buyers have win. If they choose to stay below 87.3, then the sellers have win. But currently the sellers are winning, but the sellers cannot win that far because of all these barriers that is standing between them. The 200 EMA is there, the 36 EMA is there. So this is how far they can push price down. If the sellers are able to push down below this barrier now, then the sellers are winning. So we have a low risk trade if price starts to move back above 87.3. Let me see what that 4-hour structure looks like. Over here, we know the buyers are down here. That rejection shows it as well. And then over here is where the 4 hours barrier is, right there at 87.93. Let's look at hourly. The same, the sellers are pushing price down, but they are encountering so many areas of rejection. So we can start to see explosion in euro pound as we go up. And if we trade above 87.33, as I said, it is good for the buyers, and they might decide to exert more pressure. So 87.33 is a key number that I will note, and trade above it can give us a good reason for price to flow. So that is that on MetaTrader. Now I want to look at this on much deeper level of trading view. I know what I'm looking for, and I know how I'm gonna have to deal with it. So on trading view, the key thing about that analysis is one-sided. On trading view, I will look at a almost all round. Okay, so what I want to look at on trading view is key supply and demand level. So if I go to monthly quickly, and if you can pay attention to this, I bet it will help your analysis. What I can see on this monthly chart is from down here is the last low. It's not as important because price is not just going to reach there anyway, but I like to have it on my chart. And then this is a last high. So if this is a wave that is pushing us forward, like say, for example, if this is a major wave that is pushing us forward, and then we have this particular low, and then we have this particular high, and then we have this particular higher low, we can have potential possibility for trend to continue to go back up higher, all right? Because in line with the trend, we can possibly have that, all right? But having this area as serve as a huge barrier for price, as price is moving down, we tend to break this structure, break that structure, break that structure low, break lower again, but we didn't take out this, which is good for us. And then we start to move back up, and then we break this structure, we break that structure, we break that structure up again, and then we come to a level over here where we're seeing this massive consolidation. Okay, so on monthly, if we have a key order block that is acting as barrier for price, it's probably going to be somewhere around there, okay, on monthly chart, which is where the institution sell off the last time, and then there's a monthly order block, say for example, in that particular area. All right, but as of now, we have not even mitigated that monthly order block, and price can still find a very good reason to go there and find that possible sell-off. All right, if I move to weekly, I've seen what I wanted to see on monthly. If I move to weekly, the other key levels on monthly will be another low, which is not that one. So if we're looking at this level of low on monthly, what we see is we actually trade below that low. And that's not such a good sign in a way, but we will get to that one. Okay, so the weekly chart is giving us its own expression. We've left the monthly order block somewhere around there. We have also different kind of levels that trade back to it and find rejection over there, which are huge resistance level. We nearly touched that over here, but we didn't quite touch it. We're going back there again. And the one thing that we can see on weekly is coming from this high, and we kind of sell off to take out this low. What we've been seeing is, if we put a Fibonacci first of all from this high to this particular low, we can see we are rejecting the golden level 78.6 clearly over there. And what we've seen with that is price has moved from this particular low back to this high. We start to trend back up higher, and we haven't breached this last low for any reason at all, and we've come back here. Okay, we have another swing low and I'm anticipating potential possibility for price to come. That's just me anticipating. So how do I now time this in? When price decide to leave some key levels, let me take out the Fibonacci. When price decide to leave this key level and come down to here, but fail to take out this low, let me take out this one as well. One of the key important area, which is a structure where we break, is this. We have that break of that structure to the upside. Now we come back into it, right below it, and then we are looking at potential possibility for price to rise back up. We have to remember the 87.33. Currently, that high is 87.27, and we need to trade above 87.33 for the buyers to really feel like as if they are winning. So, and that's the level that we see as a monthly point of control. So having said that, what can we see on this chart? As price moves down, we created like a left shoulder, we created like head, and then we created like a right shoulder, which is clearly a reversal pattern, and then we trade above the neckline. All right. So what we have done is we've moved back to where the neckline is. We trade above, right, which is strong. We retrace back to where the neckline is, which is break, and we are retesting where the neckline is, and we have potential possibility for price to push up higher. So that is another thing that's glaring to us on a reversal on this weekly chart. So if we look a little bit into daily, let's see what is going on here. So on the daily chart, the same trend lives from this low to this high, to this low, to this high, to this low. So we have that, back to that, back to that, back to that, and we have series of back to this one. So the trends still remain intact, and back to this low, and then we kind of make this high, okay? And now we traded back below and we break this low. That is us invalidating the trend. And then we make a lower high compared to that one. And then we make a new low. So there's a series of challenge over here for the euro pound to say that I want to continue to be going up because of the bearish order flow. The price has breached some levels, and the daily is what is exposing us to that. And this is the reason why understanding analysis becomes a very great tool that you can develop on. So when we breach this low, trend kind of change to the downside on the daily perspective. Because as we are coming, this is a high, low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, then lower low compared to that, then lower high compared to this, then another lower low compared to that, and then what we are seeing now is lower high compared to this. If we cannot trade above some key levels in some perspective, some people will be looking for this high to be breached back, okay? And if this high is breached back, obviously then they can have full confidence to say that they want to trade a break, retest, and continuation to the upside. There's nothing wrong in that. All right. But in this scenario where we are now, we've seen a breach of a level that causes trend change. We need to look to the left and see what is holding the price. And it is this particular demand level that's holding the price. And it's a daily order block. We've come back significantly into it. It's a demand level. So that demand zone, and that demand zone will be suffering from a supply zone, which is probably above here, which is in this area at the same time as well. Okay, and this might be too big of a supply zone, but there's nothing wrong in that. We can adjust it. So supply zone. So if price moves from demand level is looking for a supply zone, we've reached that supply zone, and what we are looking for is possibility for that supply to send us back down again. Okay, and if that supply is going to send us back down, let's look for another quick demand zone, which is over here, which is where traders are buying anyway. Right, so inside the supply zone is where we have our key monthly point of control, daily point of control of 87.33. And that is daily point of control. So I like to shift that to the right. I like this blue because it's daily, and I like to make this blue as well, just for me to know that it's daily. All right, so if we trade above this daily point of control, and each and every time we've tried to trade above it, we reject, trade above it, we reject. And but if we eventually manage to trade above it because of the way the weekly closed, then we can start to be looking for things to go upside. But for now, we have a bit of caution because of what this daily chart is presenting to us. We've had a trend change. We've now traded below that trend change. What this supply can do for us is pressurize this further down and take things back down to another supply zone. The one key time frame that we'll look at again is what do we see on 12-hour chart. So as we've understood, our price has moved down to this demand zone, and then we start to move back up, we're not going to have a key trade until we break above this level, a key significant strength of buyers until we break above this level. But how are we behaving from the time that we breach this demand zone? What we can see is structural wise, we start to break some little structure. We break this particular structure over here, which shows that the bullishness is picking up. And then what happened again is we have another break of structure over here, this high. We trade above it again. Okay, and then we continue to move slowly inside this demand, inside this supply zone, which should act as a deterrent for price to move. So what we're looking for is if price is able to break this low now, then everything is over. So, but we haven't break this low, this particular low over here, everything will be over, because that's the low that's holding price going up on this particular swing that we are seeing. So what we are seeing is the stops. The traders who are buying these have their stop over here, okay? And then there's another leg of the traders that shifted up. Please bear with me a second. Hello? Yeah, you're right? Yeah. All right, then let's say 15, 20 minutes. All right, then. Cool, no worries. Okay. So looking at this in depth, we've this, if we trade below here, it's a problem. If we can trade below there and we continue to trade above 87.33, then it's a good thing for us. So we are still clustered up because everything inside there is a supply zone. The best trade for this guy to continue to go up is for us to see a break above here, right? And retest it and continue to go up. That is the best trade for now. Inside there, the only clue that we can have is look at the 4-hour chart. And the 4-hour chart is telling us that this particular supply zone that we pick, we can refine it to come over here, okay? And when we refine, it just give us an opportunity of our price can go. And then we are looking at that supply zone on a much more lower time frame swing. In this particular area, this become a point of interest for us. So as price is moving, gradually breaking a previous high, which it broke over there and retrace back down and break this high again and retrace back down, right? Price tend to start to find a reason to trend up higher by breaking this high again and retrace back down. And where it's retracing to becomes some other blocks for buy opportunity to occur. We have one here, which is the last red candle before we see the bullishness coming in on this 4-hour chart. And then we have another one here. So price has now come into this buyer's order block. And then if we find this rejection, which we've clearly seen over here on this last 4-hour, we can then anticipate the potential possibility for price to do this. So from this low, if we take the swing on the smaller time frame, and then we come to here, and then we breach this low on here with this particular week, there are equal levels of lows over here, which we managed to breach. We didn't come back inside this other block. And then we come to this high, and we are here now, right? Potential possibility for price to move up is imminent back to here. And if we are going to do that, we would have traded above that 833, which is daily point of control over here. So if we trade above the 833 point of control based on this other block, our risk on this trade now will be to be looking at a trade like this, long position, anything from inside there to target this area first of all. So whether this is, all right, so this is a risk reward ratio of 3.5 to 1, which is not such a bad risk reward ratio. So which means we are risking 30 pips to make 108 pips. It's a high probability trade, 30 pips to make 180 pips. If price then break below this other block now, then we will be considering another buy opportunity in this area, right? And then probably that buy opportunity we're still going to be targeting here. So these are the two trade scenario that I can picture for now before the market open, right? And then this one will give us a risk reward ratio of about 2 or almost 3 as well. We risk about 57 pips to gain 171 pips down to that area first of all, before we can even think of us breaking this area and continue. And what is key about this area is this. When it comes to looking at the swing, on this swing, the sellers are over here, they are putting their stops over there, right? And then they shift the price back down. And when they shifted this price back down to continue to break the trend that is going up, the the new sellers kind of joining from over here. So all these new sellers that push the price down, they have their stop over here, okay? And then we can have a trap volume over here because the buyers that want to look to take the breakout trade will be waiting for the price to move above here, okay? And then possibly until they see retest, which is the patience that's needed to be seen, then they're not going to be considering buying this on the long side. I hope this bit of analysis, if you manage to listen to it and then you find a bit of understanding of it, despite the fact that you did not ask any question, I hope it will bring a little bit of a clue into what analysis is required to be able to make an informed decision. You can be forming all sorts of different kind of hypotheses at the back of price, but you still need to go through the in-depth analysis to understand exactly what is happening in the marketplace. And once you can master that skill and understand the story at the back of the price movement, and what story are we looking at is we want to know psychologically where the traders are, all right? So we know at this bottom, there are buyers over here, their stop is there in a way. As price move up, there are more buyers over here, their stop is here, okay? As price move up, there are more buyers over here who put their stop over here. We kind of take out those buyers and then because we breach below that particular low in a way, and then we use that breach to push price back up above the high, and price tends to do that all the time. So now as price is coming back down below, it is now crucial for price to prove a point. And one of the first points that we need to prove is if we want to stop over here and continue to go up. And a 15-minute chart can give you that kind of a clue. And what you want to see is a bullish order delivery on 15-minute charts. So as price moves up, then we come down to this low, and then we make this lower high, then we come back down to this low, and then we make this lower high, and then we come back down to this low. So the moment price is able to take out some of the 15 minutes previous lower high, which are all over here, that is what we are waiting for. If we can find the price move that will now say maybe from here, trade above here on a 15-minute chart, now we've broken the current high. And if you retrace back down to whatever, take this it's 7.3 again, use it as an opportunity to move back up. That is what we are waiting for to actually be a buyer in this. So our last point of mitigation that we needed is on this 15-minute chart, which are this high. If we actually need price to move above these previous highs that were seen, right? And then potentially see a retracement if it's possible back to 733, and then take that back up. And that would be the ultimate way for me to see how the price will develop and continue to go back up. And for this is where I'm going to be calling it a moment for now. I want to say thank you to Kwaku, Christian, and Neno that managed to stay true to the end and then witness this analysis. It's an eye-opener for you. It's an eye-opener for me as well. Each and every analysis have its own key thing that you can learn. Today, I know we cover some pairs, the way to look at the pairs and structure, which one to eventually take. I mean, take the ones with a high probability that can show possibility for continuation, you know. And if we look at this wave or this particular swing, we can equally see that this is a potential possibility for a swing of 0 to 1, 1 to 2. We are looking for 2 to 3. And that 2 to 3 wave is a very good, significant wave that if you want to be part of, will make a lot of difference in your trade, because some majority of the time is the most extensive wave. So if that is 0 to 1, this is 1 to 2, and we are building 2 to 3 currently, and that 2 to 3 might be the one that will break this high, you know. And if it does break this high, we might say 3 to 4 retracement back to there, and then shift to 5. So we are on the 2 to 3 wave. We are still building the 2 to 3 wave to take us to the 5. So I love the 2 to 3 waves, because if it's going to work out, it will give us that trend that we are looking for. So let's keep an eye on this as we go into the new week on Euro Pound. If I manage to do some other analysis, I'll post them into the group. Thank you so much, guys. I appreciate your time, and I'm going to be calling it a day now. All right. And
quick question.
Yeah, go on.
Would you post this recording, please? Where will you post this one so that we can go through again?
I will post it on YouTube.
Okay, this particular one, yeah?
Yeah, this particular one.
Okay, yeah. And then secondly, what's the best form of contact for you? Because I've sent messages on the Telegram, but I don't get response for there. So I just how do I contact you?
All right, so take my WhatsApp message. Take my WhatsApp number.
Okay, 1 minute. Okay, I'm ready.
Okay, so that is 074. Let's say +44 if we have anyone that's not 0474040945528.
Are you typing it on?
Okay.
So it's 074.
Yeah. 040
040
94528.
94528.
Yeah.
All right.
All right.
Okay, then. Thank you so much.
You're welcome. Thank you for staying true.
Later.
All right, then. Speak to you in a bit. Thanks, everyone. This should be ready before the